Welcome to Market Momentum. In today's markets, it is so easy to get lost in all the noise, right? Well, we're here to cut right through that confusion. We're going to give you some clear, actionable insights on what's really moving the needle in crypto, US stocks, and precious metals.
So the big question is, how do you even navigate all this? I mean, with the markets being so choppy, it's tough to tell what's a real solid trend and what's just, well, a distraction. That's what we're going to do today. We're going to dig into the data, separate that signal from the noise, and really find out what actually matters for your portfolio.
Okay, first up, let's tackle the wild world of crypto. And right now, the data, well, it's flashing some pretty serious warning signs. It really looks like we're heading into a period of turbulence and, honestly, a lot of risk.
So check this out. What's really interesting here is this growing disconnect. Over on the left, you've got global liquidity. It's trending up. Now, theoretically, that should be like a rising tide that lifts all boats, including crypto. But then you look to the right, and nope, crypto assets just aren't following along. They're volatile, they're choppy, and that mismatch, that's a huge flashing red light for underlying instability. And if we zoom in on the big players, the picture gets even clearer. Our key indicators for Bitcoin, they've flipped to sell. And listen, until we see a major decisive shift there, other assets like Ethereum are just going to stay in that high-risk category. I mean, for ETH, you'd really need to see a convincing break above that 41.15 level to get optimistic. But for now, it's just too tied to whatever Bitcoin is doing, which is not great.
So what's the bottom line here? It's simple, really. This is a time for patience. This is not the time for aggressive trading. The smartest play you can make right now is to just hang out on the sidelines. Let the market settle down and wait for a much clearer, more stable signal before you even think about making a move.
All right, let's switch gears and move over to the US stock market, because here we're seeing a completely different picture start to form. While crypto is screaming caution, US stocks, they're actually showing some real underlying opportunity, if you can just look past all the surface noise. And there is so much headline noise right now, isn't there? Especially with all the talk about a potential government shutdown. That kind of thing creates a ton of uncertainty, and it's what's causing these little short-term dips. It's really easy to see that kind of volatility and, get a little spooked. But this is the signal we've been looking for. History teaches us a really powerful lesson here. The market's main dominant trend has proven time and time again to be way stronger than these temporary political squabbles. Once all that noise just fades away, the market tends to just get right back on its primary track. And this chart, it illustrates that point perfectly. Just look at the S&P 500's performance after past shutdowns. The pattern is just incredibly consistent. It's not just that the market recovers, it often comes back even stronger and just continues that big upward trend. So what does this mean for our strategy? For the S&P, the Dow, the Nasdaq, it becomes crystal clear. The dominant trend is up. And that means we should be looking at these politically driven dips not as a crisis, but as potential buying opportunities inside of that larger, much more powerful uptrend.
Okay, now for something really interesting. Let's talk precious metals. Because right now, they are showing one of the clearest, strongest signals you can find pretty much anywhere in the market.
The story with gold and silver right now is just beautifully simple, and it's powerful. We have a strong, sustained upward momentum. It's in place. And when you see a trend this obvious, the best strategy is usually the simplest one. Just ride the wave. And we're not talking about some slow, boring grinder higher either. I mean, look at this. A recent weekly gain in gold of nearly 4%. That's a trend with some real force behind it. And it's continuing to reward investors who are doing one simple thing, holding their positions. Look, in a situation like this, the simplest strategy really is the best. The key is just to hold on to your positions. Don't get tempted to sell and take those profits too early. Just let this strong upward trend do all the heavy lifting for you. Okay, so we've talked about waiting on one asset, buying another, holding a third. Acting on all these different signals really requires the right mindset. So before we put together our final playbook, let's talk about a super important psychological distinction. This is the thing that really separates successful investors from, well, everyone else. It is absolutely vital, I can't stress this enough, to understand the difference between a real loss of your money and something called an opportunity cost. An opportunity cost is not a loss. It's just the potential gain you might have missed out on by choosing a different path. Totally different things. And this really makes it crystal clear. An actual loss, that's when your capital goes down.
your $1,000 turns into $960. But a missed opportunity, your $1,000 is still $1,000. Your capital is totally intact. If you confuse these two ideas, you start making bad emotional decisions. And recognizing this difference, that is the absolute key to disciplined investing.
Okay, so let's bring all of this together now. We've looked at crypto, we've looked at stocks, we've looked at metals. Now it's time to combine it all into a single actionable playbook for how to navigate the market right now.
And here it is. This is our distilled playbook, all based on the data. For U.S. stocks, the signal is underlying strength, so the action is to buy or accumulate on those dips. For precious metals, we've got that strong upward trend, so the action is to hold and let your winners run. And finally, for cryptocurrencies, the signal is volatility and sell indicators, so the clear action is to wait. Just stay on the sidelines for now. So I'm going to leave you with this final thought to chew on. Take a look at your own portfolio and ask yourself, is it built to capitalize on the signal, or is it being constantly distracted by all the noise? Answering that question honestly is the key to making sure your strategy stays focused on what really, truly matters in the long run. Hey, thanks for joining us for this market breakdown. We appreciate your support, so be sure to subscribe and like for more insights.